Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq, coming to you live from CES at Las Vegas, Nevada. And joining me for the segment, we have Pedro Palandrani. He's head of product research and development at Global X, and we're here to talk about the discernible trends cross-sector technology-wise. And Pedro, it's great to see you as always, whether we're in New York, whether we're in Vegas. It's so interesting because Global X, since I've been covering you for nearly a decade, the thematic product that you guys bring out, and it's largely been around emerging technologies and so forth. Now we're in AI. That's all everyone's talking about. But what's interesting is we're thinking about user experience, integration. What is that return on investment going to be? Because the products are out there, but now what does that mean for companies?
Absolutely, and first of all, thanks for having me, Jill. Look, AI is definitely grabbing all of the headlines, right? And we've seen from NVIDIA really capturing that massive opportunity, generating revenue run rates close to $200 billion, which is quite impressive over the last couple of years, exponential growth. Investors are really trying to understand where to invest beyond common names like NVIDIA, Google, Meta, and that's really kind of what we're seeing interest from investors, right? Whether that's data centers, whether that's the power energy story, whether that's the software side of things, hardware. So we're really trying to understand where that ROI is, and we think that the AI infrastructure segment is one that really offers a lot of promise, right? We've seen these Mag 7 companies promising about $200 billion of CapEx going into AI infrastructure. And that's one area that data centers could really capture into 2025.
They definitely can. What's so interesting, it's our third year covering CES, and we're in what's called, it was the EV hall, but now it's the electronification of everything. We have ag tech in here, we have auto tech innovation, safety innovation. I feel as if this is, it's a big crossover this year, where we're seeing these concepts really be put to life.
It is, and like you say, we started looking at a lot of electric vehicles more than ever this year. We see so many models of electric vehicles here at CES. But beyond that, if we think about the electrification story, we're talking about manufacturing, that increase in manufacturing activity and how much that impacts electrification. Data center, right? We know that, for example, a ChatGPT query consumes 10 times more energy than a Google search. That's really driving massive increase in electrification demand in the United States and elsewhere around the country. We're talking about robotics, we're talking about so many trends that are really serving as tailwinds for the electrification, bringing to life that energy story to the tech side of things. So that's one area that we're quite excited about, the electrification story in the United States. United States, just as for context, is the largest data center market in the world with about 50% data center capacity, and that's going to continue to drive demand for energy electrification, and it really excites us.
It's interesting because I'm looking around here and some of the names, we have Corning over there, right? We have John Deere, Caterpillar, a number of industrial names, and to your point, I mean, we used to have the health tech companies used to be in the hall here. Now they have their own thing at the Venetian because with AI and the more data that's being produced as a result from that, we're learning how these emerging technologies are helping to drive different industries. And to see the growth just in, as our third year is about 2.5 years, is quite incredible. And because of all these different technologies, Pedro, how does an investor get exposure to this? Because it's not just a specific, okay, let me invest in semiconductors. It is multiple industries we're talking about.
We're really talking about the convergence of technologies and themes, right? And that's really what we're seeing investors paying attention to. If you're thinking about artificial intelligence, it's quite broad. You certainly can tap into the AI enablers. You can also tap into the AI users and how companies are really offering solutions to clients through artificial intelligence. You can also look into the hardware side of things, right? Jensen Huang yesterday at their keynote mentioned that we're going into the physical AI era, one that actually brings AI to life, whether that's humanoids, whether that's autonomous vehicles, whether that's hyper-synchronized factories and warehouses. So that's another area that is quite important for investors. And look, at Global X, as you know, we've been offering thematic ETFs for over a decade now. We have our data center and digital infrastructure ETF, DTCR, really offering exposure to the AI infrastructure. We have AIQ, which is our artificial intelligence and technology ETF, really tapping into the pure play AI companies, and so many other offerings. Just recently we listed at Nasdaq our Global X US electrification ETF, ZAP, really offering exposure to that energy side of things that is behind so many tailwinds that we discussed today.
Right. Which is so interesting. I mean, even when you look at the top performing sectors and stocks, whether they're utilities or energy related, as a result of the AI story, it makes you think, well, if we weren't really talking, November 2022 is really the catalyst behind all this. What if that story wasn't there? What would the landscape look like? Which is so interesting. But another question I have on the flip side, with all these products that are coming to market leveraging AI technology, whether it's internal or external facing, what about cybersecurity? Because bad actors are leveraging the same sort of technology, and are we thinking about risk mitigation and response with this rush to go to market in what's a very competitive landscape?
And you're 100% right. Everything is connected these days, right? Whether it's our phones or laptops and every single technology that we use out there. And that's definitely another theme that we're paying attention to. Just for context, annually, we're spending about $250 billion in cybersecurity spending. The Pentagon just alone this year is expected to spend about $15 billion in cybersecurity. A lot of that is really trying to understand AI, right? How bad actors are using artificial intelligence, because like you say, that's really a new avenue for cyber attacks to happen. And that's really also serving as a tailwind for cybersecurity companies to really tap into the solution side of things. So cybersecurity is another theme that we're paying attention to, whether that's with your traditional pure play cybersecurity companies or more of the mega cap companies like Microsoft, Google that are also offering some of those solutions.
I'm surprised the enterprise spend is as low as it is, because the thing is, cyber also has such an intangible worth to a company. I mean, you can't really place a value. I mean, I guess you can, with different studies in terms of what your brand value is, but there's no crystal ball in terms of how long, a product line or revenue line could be down, what that means from a reputational perspective. I'm surprised the spend is as low as it is, honestly.
And we agree with you, right? And I think that's going to continue to grow, right? We would expect by the end of the decade, cybersecurity spend at the enterprise level to be north of $400 billion. So it's going to double down over the next few years. Still, we see a significant run rate. And what attracts us as an investor is really the business model of these cybersecurity companies, right? Because if you think about it, Jill, we're really looking at software as service names, right? So that cloud aspect is really bringing those very strong business model with a strong revenue retention rates, very profitable business model. Some of the companies may not be profitable, but they could actually, they continue to invest in growth, but they could actually be profitable as they continue to scale their businesses, as we've seen in other software as service names in the past, like Salesforce, that really transition into profitability quite easily. So very attractive business model from cybersecurity names.
All right, Pedro, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me from CES. I'm Jill